Jai Hind friends. In today's video, we are going to discuss 6 stocks from the healthcare sector. So 2 will be large cap, 2 will be mid cap, and the remaining 2 stocks will be in the small cap range. So the reason why I picked healthcare sector is because this is also one of the fastest growing sector in India. And since 2016, if you look at the data, it has been growing at around 20+% CAGR rate, and it is expected to grow at a similar rate in the near future as well. And also, this is one of the essential sectors because hospital, no matter what economy is going up, down, healthcare is a basic need. People will fall sick, and hospital business is going to sustain in the future as well. And with more and more penetration of insurance companies, insurance sector in the Indian market also, it is eventually indirectly going to boost the healthcare sector. So our first company is Apollo Hospitals. It is currently trading at 7275. If I look at 1 month return, it has been 2%. 6 months have been 18.55%. YTD return has been very good, 26%. 1 year return 29. 5 year return has been very good, 413%. And maximum chart pattern, if we see, again it is a good chart pattern of a good company. So here are some of the details you can see about the company. APL Apollo Hospital was established in 1983 by Dr. Pratap C. Reddy, and it is nation's first corporate hospital and is acclaimed for pioneering the private healthcare revolution in the country. In the private space, this is the largest hospital chain that we have. So market cap of the company is 1 lakh crore, and it is currently second in terms of market cap, but it is a leader in the private sector hospitals. And here you can see the sales compounding growth of the company, which is very good, above 15%. And profit compounding also is improving. In the last 5 years, it has been 34, last 3 years 109, and last 12 months 70%. And stock CAGR return also is looking very good and decent. 1 year 27, 3 year 14, 5 year 39. Return on equity also is in double digits. So overall, it is a good company, a leader in its space, and healthcare sector is bound to grow as India progresses. And as I mentioned earlier, the more insurance sector penetrates in Indian market, the healthcare sector will also get benefit out of it. So if you are looking for a sector which can provide you consistent, decent return, I think healthcare sector is one sector which we can look at. Next company in the healthcare sector is Max Healthcare Institute. And if we look at 6 month return, it has been 30%, YTD 66, 1 year 70, 5 year 926%. And if we look at the maximum return, it is again same because it got listed in 2020. And from the time it got listed, you can see it is consistently going in upward trend, and the chart is also very consistent. So this also shows that the company's sales and growth is also consistent. In terms of market cap, this company has surpassed Apollo Hospital as of now, and it has become the market leader in terms of market capitalization. So here you can see the details about this company again. And in terms of leadership, you can see Max Healthcare is India's second largest hospital chain in terms of revenue. So first being Apollo Hospital and second being Max Healthcare. And the market cap of the company is 1,11,000 crores. And here you can see the sales growth of the company, very consistent. 5 year 26, 3 year 29, 12 21 20. So everything above 20%. Profit compounding has been very good in 5 year 780%, 3 year 96%. The 12 trailing month we are seeing some pressure. Stock price CAGR also has been very good. 1 year 68, 3 year 39. Return on equity again similar to Apollo Hospital in double digits. So both company are large cap companies from the healthcare sectors. Both are, we can say, leader in their sector. So if you want to go with the healthcare sector, you can definitely do your own further research on these two companies. Both look very decent. Now coming on to the third company from the healthcare sector. This is a mid cap company and currently trading at 1313. Company name is Narayana Hrudayalaya. And if you look at 6 month return, 9%, YTD 9%. 1 year return has been 10%, 5 year return has been very good, 337%. And if you look at the maximum chart pattern for this company, also chart pattern is looking decent only, going from the bottom to top right. And you can see the current market cap of this company is just 26,000 crores. So it is still a mid cap company, we can say. Now, if you look at the details, the company also has given good CAGR profit growth. In last 5 years, it has grown by 67.8% CAGR in terms of profit. And if we compare the PE of this company with other leaders, which is Max Healthcare and Apollo. So Max Healthcare is currently at a PE of around 100. Apollo is at 88. So both are leader companies. So market has given good PE to them. And Naren Healthcare, although it is growing at a good rate, its PE is still very low. You can see it is just 34. Whereas all other companies, you see a PE of at least 60 or 80 range. So what this means is this company is still available at a fair price. and also there is a chance for PE expansion in this company. So if market gives a PE to this company also at around 60, it can easily double, and on top of it, it will also grow in terms of its EPS growth. So here you can see the sales compounding of this company: 10-year 16, 5-year 12, 3-year 25, 12 trailing month there is a little bit of dip. Profit compounding has been very good for 10-year 51, 5-year 68, 3-year 365. 12 trailing month we are seeing a little bit of struggle. Stock price CAGR for 5-year has been excellent, 34, 3-year also very good, 29, last 1 year 10%, and return on equity is better than the leader companies you can see here, which is APL, Apollo and Max. So return on equity is much better, so their business is much better than those company. So this company has a potential to become even bigger in terms of size. Next company from the healthcare sector is Medicure, and if you look at YTD return, it is 72%, 1 year 75, 5-year return has been very good, around 1082% return. And if you look at the maximum chart pattern, again you will see the similar kind of chart pattern which we talk about, going from the bottom left to top right, which signify that this is a good company which is consistently growing. And if you look at the market cap also is not very big at this moment, it is just 25,000 crores. Now looking at the details of the company, so Medicure is India-based manufacturer and exporters of medical devices. The company exports plastic medical disposable and surgical devices. Here you can see that this company serves a global market, supplying its product to 100 plus countries across Europe, Africa, Americas, Australia, Asia through a network of 250 distributors. And in India, its products are distributed to over 6,500 private and government hospitals and nursing homes. And currently, if we talk about its market share, company has 5 to 6% market share, which it plans to increase by 10% in the next 3 to 4 years, which is a very good sign. So here you can see its sales growth: 10-year 16, 5-year 18, 3-year 21, 12 trailing month 22. Profit growth also very good: 10-year 21, 5-year 32, 3-year 24, 12 trailing month 26. Stock price CAGR also you can see: 10-year 28, 5-year 64, 3-year 41, 1-year 66. And return on equity is also higher double digits. So everything looks very good. It is growing at a very consistent rate. Currently, it's not a very big company. Also, company is also planning to increase its market share. So I think this company has a potential to become even bigger. So you can definitely keep this one also on your radar and do further more research and then only take your own decision. Next company is from the diagnostic area, and if you look at 1-year return has been 70%. 5-year return, nothing, same 71%. It got listed in 2021 in the month of September. And if you look at the market cap, this company falls in the small cap range. So the market cap is just 11,000 crores. So here you can see the sales growth: 5-year 13, 3-year 13, 12 trailing month 27. Profit growth for the 5-year it is good, 19%, 3-year a dip, 12 trailing month it is improving 30%. CAGR return also 3-year is very good, last 1 year excellent. Return on equity is also good, around 20%. So it's a small cap company from the diagnostic area, growing at a very good rate. If you look at last few quarters, you can see the growth in terms of sales. Last quarter sales grew by 31%, before that 29, 28, so around the range of 30%. And the OPM percentage is also good, around 40%, which shows that the business is great. They have the pricing power also, and in South India this is one of the leading diagnostics chain. So it's a good company, currently very small in size. If you're looking for a small cap company from this area, you can definitely keep this also on your radar and do your further research on this company. Next company is again from the diagnostic area, which is Krishna Diagnostic. 1-year return if you see 15%. 5-year return is in negative. It recently got listed. It got listed in 2021 at 926 price, and it has still not breached that price. But once this company breaches its previous peak, then I think from there on we can see a good growth or good upside in this company. The market cap of this company is very small. It is just 2.78 crore. And here you can see the company is one of the India's fastest growing diagnostic service provider. And if you look at the quarterly results of the company is growing consistently. Last quarter it grew by 21%, before that 23, before that 37, and before that 30, 21. So you can see consistently it is growing at a good rate, and OPM also is good, around 20%, 23%. And here you can see the sales growth consistent. Profit compounding: 5-year 36, 3-year in negative, and 12 trailing month it has again picked up. And CAGR return: 3-year 10%, 1-year 20, which is not that great, but this is fairly new in the market, and I think once it breaches that mark, it should give a good upside because the growth is consistent now from last couple of quarters, and return on equity is in double digits. So this is a risky company, a very small company, but looking at the last 3-4 quarter growth, I think this can give good returns. So you can also keep this in your radar. If you like it, do your more research on this company and then only take the decision. But follow the rule that in large cap you can invest large portion of your capital, in mid cap the mid portion of your capital, in small cap the smaller portion of your capital, because in small cap the risk is very high. If you have any questions related to the video, related to any share, if you want to give suggestion on the next video that I should be making, you can mention it in the comment section. And if you like the video, please hit the like button and share it with your friends. Thank you. We'll meet in the next video with some other information. Bye bye.